Hello and welcome. You're watching First Tick here on News 9, where we bring to you the morning buzz on the Lal Street. I'm Suyash Maheshwari, and with me in the studio is Amit Ranjan. And it's a Monday morning and a very strong start to the day of trading for the markets. Nifty has opened gap up above 22,300, and although we have paired some of the early morning gains, the index has now recovered almost 500 points or 50% of the entire 1,000 point fall. What's driving the market, you may ask? It's the global cues again, or lack of it, I must say. I mean, the biggest risk for the market going into the weekend was what Iran was going to do after Israel's retaliatory attack on it on Friday. And since most of the attacks have also happened around the weekend, the initial attack by Israel on the embassy in Syria, Iran's response last week, and the Israel's retaliation to Iran's retaliation, the markets were especially nervous. That's, I think, what we saw on the Wall Street also, right? A big sell-off before the end of the week.
Yeah, and Asian equities, US stocks, stock futures, they gained after last week's slump, mostly because on the back of no further escalation either from Iran or Israel over the weekend. Dow Jones closed in the positive at 0.56%. S&P 500 closed in the negative at 0.88%. Nasdaq Composite was down 2.05% at the close of last week. Coming to the European markets, almost flat. Stock 600 closed at 0.08% in the negative. Hang Seng this morning is up, recovering from last week's slump, 1.65%. Nikkei is up 0.35%. Most of the tech stocks in the US, whether it's Nvidia, Apple or Tesla, they're all in the red right now.
Right, and that's what we were talking about, right? Because the US markets, they saw a sell-off because of, they were worrying about what was going to happen in West Asia. Nothing happened. Good news for everyone, I think, financial markets altogether. That's why we are seeing a pickup in future prices. And Asian markets, they have, of course, as Amit put out, have opened in the green this morning, including India. And, look at the other global cues that we track over here. The US 10-year yield, essentially, it is flat at 4.66%. The dollar index is holding above 106, but pretty much flat from Friday to Monday. Brent crude, in fact, has corrected and has fallen slightly. We were hovering around $87 a barrel mark when we left off on Friday. We are currently at about $86.5 a barrel. And another reason, I think, the markets were jittery, especially in the back in the US, was that 40% of the S&P 500 companies will be reporting their earnings this week, including 4 of the Magnificent 7. And speaking of earnings, a big week for our markets as well. We have Reliance Industries today, and Axis Bank and Bajaj Finance will also come out there with their earnings on April 24th and 25th, and then HCL Tech on April 26th. So lots and lots for our markets to worry about, as far as the cues are concerned. But again, let's look at the levels that we are currently at, because, Nifty opened above 22,300 in the morning trade itself, but we have seen some bit of a retracement from those levels. Currently, we are hovering around that 22,260 mark, have fallen by about 40 points or so from the day's high. The mid cap and the small cap indices are up about 0.8% to 1%, and Sensex is also up 0.44% this morning at 73,408. But again, look at what has happened, the past 1 month. From March 20 to about, early in April, Nifty rose about 1,000 points, then it fell about 1,000 points, and now we have recovered nearly 500 points. So wild times we are in, and, at a time when volatility is this high, it's very important for us to, keep our levels in check and keep the, the levels where we are comfortable, the support and resistance levels I'm talking about on indices when we trade. And for that, joining us on the show is our technical expert, Avni Bhatt of JM Financial. Ma'am, thank you for joining us here on News 9. And what are you making of this rather sharp recovery in Nifty? We have retraced about 50% of the 1,000 point drop. Where are we likely to, where are we more likely to go from here, and what are the support and resistance that you are currently tracking on the headliner?
Good morning, Suyash, Amit, and all the viewers. So yes, Nifty did see a very strong recovery on Friday, and that continued today morning. But if you look at the data from the FII front, after 4 days of massive selling on Friday, FIIs came up with long figures in Nifty futures. So what I'm talking about is individual index activity by FIIs. So FII's view on Nifty is slightly positive, but they are still overall sellers in the index futures. That is a cumulative of Nifty, Bank Nifty, Fin Nifty, and Mid Cap Nifty. So their even long short ratio has dropped down to 35% from the highs of around 59%, which was last to last week. So FII outlook is still negative, and also levels wise, if you look at the options data also, 350, 350 to 400 is a crucial resistance zone. So you can say that Nifty will be out of the woods only and only about 22,400. Once it closes about 22,400, I think then we should see a good recovery in the markets right up to 22,800, which was the previous all-time high, close to that level. And for Bank Nifty, that level would be 48,200. Till then, for this April series, for the remainder of this April series, I think a temporary bottom has been formed on Friday, the low of 21,777. And similarly for Bank Nifty, now the support stands at 47,000. So more or less for next 3 to 4 days, I think the indices, both Nifty and Bank Nifty, should be trading volatile between the range of 21,800 on the downside, which will be the worst case scenario, but more or less the expiry should be between 22,000 to 22,350, 400 area. And for Bank Nifty, it is 47,000 to 48,000. So volatility is going to rule the markets, but a temporary bottom has been formed.
All right, a temporary bottom has been formed, but be cautious about the volatility going forward as well. But shifting focus, we are in the midst of the earnings season, and HDFC Bank came out with its numbers over the weekend. The numbers, I mean, if you adjust for the oddly high provisions, they are largely in line. What went right for HDFC Bank was NIMs. They picked up by 4 basis points quarter on quarter. They are now at about a 3/4 high. CASA ratio, which is also at 3/4 high. What was not so good was a sharp correction in the retail and the wholesale loan margins. The stock, Avni, is down by about 1% this morning, but considering how well it has done in the over the course of the last 1 month, it's up about 6% or so. What's your take on HDFC Bank? I mean, the numbers, they are, I mean, not here, not there. Pretty much what the street was expecting. Provisioning is a little odd. I mean, it jumped by about 3 times, over 3 times in fact, on a quarter on quarter basis. But looking at the stock, some bit of correction this morning. What's your take?
Traders have become very intelligent and smart as far as grabbing opportunities are concerned. So in expectation of this kind of positive result, I think the rally had already occurred. And as far as options are concerned, 1540 was a crucial resistance for the stock for April series. So results are good. We saw the gap up opening, and now we are looking at the correction over here. So more or less, I think HDFC Bank also should consolidate in a range of 1500 to 1540. Over a longer period of time, the stock looks positive for levels of 1600 and 1650. So any dip close to 1500 can be used as a buying opportunity.
All right, that's the view coming in on HDFC Bank, but it's time to slip into a short break. Ma'am, please stay with us. We have more to talk with you about on the other side.
Currently, the industry is facing a lot of challenges as far as demand is concerned. Basically, the US markets has slowed down because of high inflation.
So obviously, diamonds being a dream product, something which doesn't have a utility value or is seen as a luxury. So that obviously goes off your shopping list. That's the first item that will go off your shopping list, especially in recessionary trends.
That lab-grown diamonds are not mined, and they do away with the entire mining. So they save up on all the environmental damage that is associated with mining, and of course, the mining cost, which is why they're even more affordable.
People that is impacted by all these recessions are the artisans, are the people who work in this industry. right? But I think lab-grown diamond has allowed them to actually use their skills in the same product.
This and more streaming on world's first news OTT, News 9 Plus. Download now.
Luxury is now becoming a need rather than something that you aspire to be. So that is adding a lot of fuel. Obviously, government has played a vital role in it.
In a city like Mumbai, a luxury home may be something upwards of rupees 10 crores. In city like Delhi, again maybe something upwards of 8-9 crores. But in Bangalore, we typically define a luxury home anything which is upwards of about 3 crores.
It's a combination of increased wealth, availability of more luxurious homes, and simultaneously the overall economy doing better.
This and more. Streaming on News 9 Plus. News is now content. Subscribe and get free vouchers.
It's probably the best kept secret in India.
Family-owned business, which has been extremely clinical in their approach. They have not hesitated ever to kill their darlings.
Typical to a South Indian business empire, I think they've shunned the limelight almost deliberately.
India's ever-evolving urban landscape is witnessing a new revolution. And this one comes on 4 wheels.
The affluence has been growing. Cars are becoming more a reflection of what you are.
Nobody's talking about hatchbacks. Now what next? The next is the SUV.
The contribution of SUVs is close to 55-60% of the automobile sales these days.
Is that even manufacturers like to sell SUVs?
So, how did a nation obsessed with fuel economy come to love heavy gas-guzzling sports utility vehicles? Let's look at how India fell in love with the SUV.
This and more. Streaming on News 9 Plus. News is now content. Subscribe and get free vouchers.
Welcome back. You're watching First Stick here on News 9, and we are in the midst of the earnings season. We were talking about the numbers that came out over the weekend. HDFC Bank was of course the biggest, but another company, the results came out on Friday, but that came out post the market hours, was Wipro. And Wipro, as we know, the numbers were keenly eyed by the street because we have had two companies before Wipro, and it was 1 and 1. TCS numbers were ahead of expectations. Infosys, on the other hand, disappoint. What was the verdict on Wipro, Amit?
Disappointed, and it beat estimates year on year. Their net profits fell as much as 8% to 2,835 crores. Their revenues fell to 22,208 crores from 23,190.3 crores the same quarter last year. But sequentially, the net profits rose around 5% and revenues rose about 0.1%. If we look at the stock has been in the negative in the last 1 month and in the last 5 days, about 22% in the gains over the last 1 year. But Wipro is in a problem, Suyash. They have been an underperformer even in the IT pack.
Yes, and I think one of the reasons, I mean, first let's talk about the stock, as you rightly pointed out, in the green this morning, up 2%, and kind of surprising considering the guidance coming in from the management was rather weak. Street was expecting, the first quarter FY25 guidance to come somewhere in the range of 2 to 6%. What came out was 1 to 3%, so significantly lower from what the street was expecting. And also remember, Wipro has been in some rough times lately. First, the BFSI segment, which is a major contributor to its portfolio, it contributes to about 30% of the revenues. That has not really recovered, and that's not seeing any pickup in demand or discretionary spends. So that becomes a big problem for Wipro going ahead as well. Also, Wipro is one of those companies, one of those IT companies that have struggled to convert their big orders into revenue. So that is also something we were hoping to listen from the management, and from what I have been reading so far, nothing on that front as well. But again, Wipro has corrected sharply from its weak side, so perhaps we are seeing some bit of a bottom fishing going on Wipro. But overall, again, a miss as far as the numbers are concerned. Guidance also slightly disappointed, but we are talking about the earnings, and the big one today is Reliance Industries. 10% weightage of Nifty. I mean, that's going to be a big market mover come tomorrow, Amit.
Yeah, Reliance Industries, everybody is watching closely. Although the stock has been a little bit in the doldrums, not too many gains over the last 1 month at least. So let's see what comes out. Oil prices may affect revenues big time, but it's a wait and watch there.
All right, because oil prices are, I mean, remember what has happened in the last quarter. They have picked up by about, we were somewhere around that below $80 even, but we are currently hovering around that $90 a barrel mark. We have come off slightly from those levels at about $87. So stable from, stable revenues from the oil business. And the telecom business and retail business is also expected to be steady, right?
Yeah, net profits are expected to rise as much as 13%, over 13%. Revenues are expected to, sequentially I'm talking about, revenues are expected to go up 3%. EBITDA is expected to go down, expected to be in the negative around 9-10% sequentially, of course. So that is where a little bit of a blip is there. But otherwise, it is up, especially net profits. They are expected to show a very big jump of almost over 13% as per market analysts sequentially.
All right, and even if you look at the markets this morning, Amit, we'll circle back to it because again, of course, Reliance is a big market mover, and it has done fairly well if you think about it, but has kind of hit a resistance of at around 3,000 odd levels when it comes to the stock prices. And Reliance is one of those stocks. I mean, when Reliance is moving, it takes the entire market along with it. But this morning, not really contributing to the upside. It's rather flattish on a day-on-day basis, up about 0.1% or so, whereas the market is currently up about 0.3%. Nifty, remember, again, we have seen some pullback from the day's high. Nifty was at opened around 22,300 levels, but slipped from there on, and we have in fact slipped by about 100 points on Nifty, still holding above the 40-day exponential moving average. But again, got to question this recovery, because remember, even Avni was pointing that out, that FII positioning in the options and the futures market, they were aggressively net short in the futures market. Before Friday, they were short about 1 lakh contracts. So perhaps, because remember, the market rarely after that initial dip where we went on to make a low of 21,777, the markets recovered and they were not really falling. We were hovering in that range of 21,850 to 900. So that perhaps was the catalyst that led to short covering, and that's why we saw almost a 400-point pickup from Friday's low. Even the recovery this morning, again, as we were saying, no news from West Asia is being perceived as good news, so that's why perhaps that recovery has continued. But again, we are in wild times, but I made to believe Gaurang Shah of Geojit Financial Services has joined us on the show. Sir, thank you for joining us and giving us your time here on News 9. I want to begin with what's just stepping back and taking a look at what has happened over the past one month. From March 20, we surged by about 1,000 points. I'm talking about Nifty here, dropped 1,000 points, have recovered 500 points. And a lot of that correction, the recent correction, was of course because of the escalation in tensions in West Asia. But it looks like that weekend phenomenon, I mean the initial attack by Israel on Syrian embassy, on Iranian embassy in Syria was on the weekend. Then Iran's response also came on the weekend. I think, do you think that a lot of this recovery has to do with nothing really major happening in West Asia and both the countries even standing down?
Thank you, Suyash, and morning to all of you. So, I have always maintained one thing, even when we were discussing Ukraine and Russia. And unfortunately, last year, October, the misadventure by Hamas onto Israel has led to the kind of complication that we are witnessing right now. And not only with this geopolitical situation or escalation, I have always maintained that wisdom should prevail upon the respective leaders, and instead of throwing rockets and missiles and drones at each other, you should sit across the table, have a dialogue. I think that helps a lot. But nevertheless, whatever has happened and whatever has unfolded is rather unfortunate. This may also lead to a little bit of uncertainty in terms of how the entire situation evolves. Crude oil was, is, and will always be an issue as far as India is concerned because of the sensitivity with respect to our imports are concerned, Suresh. And of course, the fact of the matter is that nuclear capability as far as the geopolitical situation is concerned will have, news flows are always something that wants to hog the limelight. But I would say that 22,000 floor, which was breached momentarily, and of course the recovery that we've seen, not to forget our own local events in terms of the election, which are underway. We should come out in a better shape and color as far as the earnings is also concerned, Suyash. So my sense is that this is an opportunity to identify stock ideas and have a long-term view.
All right, have a long-term view and identify stock ideas. Gaurang sir, please stay with us. It's time to slip into a short break. But remember, there are around 6 lakh Indian voters who are over 100 years old. These sanitarians have witnessed a struggle for independence and partition, from voting in the first election of independent India to the 2024 Lok Sabha elections. Their enthusiasm to vote continues to inspire. News 9 Plus, the world's first news OTT, brings you 100 and voting. Catch the documentary tonight only on the News 9 Plus app. Stay ahead of the curve.
Luxury is now becoming a need rather than something that you aspire to be. So that is adding a lot of fuel. Obviously, government has played a vital role in it.
In a city like Mumbai, a luxury home may be something upwards of rupees 10 crores. In city like Delhi, again maybe something upwards of 8-9 crores. But in Bangalore, we typically define a luxury home anything which is upwards of about 3 crores.
It's a combination of increased wealth, availability of more luxurious homes, and simultaneously the overall economy doing better.
This and more. Streaming on News 9 Plus. News is now content. Subscribe and get free vouchers.
Welcome back. You're watching First Stick here on News 9, and we were talking about what's going on with our markets. We have seen a recovery, or rather a sharp recovery, about 450-500 odd points from the very recent low. But then again, there are multiple factors at play. Some of them are domestic, and remember, the biggest of that is of course the earnings season. And Gaurang sir, I'll come to you. HDFC Bank also reported their numbers. The numbers, I mean, they were largely in line, but I think What do you make of this big 3x jump in provisionings? I mean, some of them are like, I was reading a lot of brokerage comments. Some of them are speculating that there might be problem in the wholesale and the retail loan department because the margins over there fell sharply, and others said that it could be earning smoothing perhaps going on because of that certain problems that they are expecting down the road, so perhaps showing less profit now to maybe offset that later on. What's your take?
See, one of quarters, two of quarters disappointment should not be a reason for your long-term investment in strong names like HDFC Bank. Point number one. Point number two, I think once we are done and dusted with the election and we get back to business, our sense at Geojit is that financials, especially banking, is going to do phenomenally well, and that's purely because of the credit demand. In terms of numbers with CASA ratio, I think they are pretty strong. In terms of interest rates, possibly second half this calendar year, we might see interest rates easing off and cuts coming through, subject to provided two most important things. One is the monsoon, which is likely to be above normal, and second one is crude oil. If they don't pay us spoil sport, I think second half interest rate cuts should come through. So we still maintain a positive view on HDFC Bank situation. My sense is that there will be brief period of consolidation. Numbers may possibly look a little bit ugly for 1 or 2 quarters, but long term we still maintain positive.
Good morning, Gaurang. Another company that is due to post their Q4 results today is the big daddy Reliance Industries Limited. Now, the street is expecting over a 13% jump in profits, about a 3% jump in revenues sequentially. But EBITDA is likely to be witnessing a weakness, primarily because of the refining and petrochemical business, which is expected to come out weak this quarter. Going by the stock, it has not really performed in the last 1 month or even in the last few days. What do you make of Reliance? Is it time to just buy or just hold or just keep it as a long-term buy?
For a company with the scale and size that Reliance is, 1 month should not be your thumb rule in terms of gauging the performance, Amit. Point number one. Point number two, last 6 months, 1 year, if you see the price performance from 22,400, it has almost gone to 3,000 rupees. But that's a decent return according to us. The biggest positive that Reliance has in Jamnagar is the technology that they use for refining crude. I was reading a report, highest sulfur content crude oil can get processed at Jamnagar's facility of Reliance. With respect to the new businesses, our sense is that they should do very well over a longer period of time. And in terms of contribution coming to the balance sheet, I think traditional business, crude to chemicals will play a significant role, and along with that, the new age business. So I think you have to look at it from a longer perspective, Amit.
Will the geopolitics of that goes with the oil prices, do you think they are going to affect this company because of their increased exposure on refining and petrochemicals in the immediate term?
It can. I will not deny it. And repercussions, like I was discussing with Suyash also, will be across sectors and companies, including economy like India. So nobody is going to, stay insulated or protected or shielded. I mean, this will have its repercussions. But let us hope, like I mentioned, that wisdom, common sense prevails and issues don't escalate which can translate into collateral damage.
We all hope that, and hope that the situation does not escalate in West Asia from here on. On that note, sir, we'll let you go. Thank you for your words of wisdom and great insights.
Thank you.
But before we wrap things up, let's look at how the markets are holding up, because remember, we were seeing some recovery, some actually pullback from that initial that rally, that gap up opening that we saw on Nifty. Nifty has bounced back. We are currently holding above that 22,200 odd levels. Remember, the 40-day exponential moving average currently sits at around 22,192, and incidentally the low of the day is at 22,198. So that becomes a key support level for us to track on an intraday basis. Although I think we would like to see to actually confirm this recovery, this bounce back, that it was not just a dead cat bounce because of that aggressive net short position by FIIs. It was not just a short covering phenomenon. I think it would be important that we are able to close above 22,300 odd levels, which is a 20-day moving average for Nifty. I think that also coincides with your 50% of that entire retracement also. So that would be a key level, and I think the markets will also keenly would also like the fact that we did not break below March low of 22,710. We came very close. 21,777 is where we went on Friday, but the recovery from there on has been rather sharp. 400 points on Friday, and about another 100 points this morning as well. But can it continue and can it sustain? That is a big question. We'll see to it and answer that when we see you at 4 p.m. on Last Tick. But coming up next is World Business Report.
India's ever-evolving urban landscape is witnessing a new revolution. And this one comes on 4 wheels.
The affluence has been growing. Cars are becoming more a reflection of what you are.
Nobody's talking about hatchbacks. Now what next? The next is the SUV.
The contribution of SUVs is close to 55-60% of the automobile sales these days.
Is that even manufacturers like to sell SUVs?
So, how did a nation obsessed with fuel economy come to love heavy gas guzzling sports utility vehicles? Let's look at how India fell in love with the SUV.
This and more. Streaming on News 9 Plus. News is now content. Subscribe and get free vouchers.
अगला स्टेशन विश्वविद्यालय है। दरवाजे बाईं तरफ खुलेंगे।
Gone are the days when starting a business meant burning a hole in your pocket, or taking a loan for that matter, and being that one-man army in your own firm. Today's Gen Zs are breaking all the norms.
Gen Z is all about purpose. They do not just want to work, they want to work for a purpose, they want to work for a mission.
The next set of entrepreneurs would be actually today's students, and they can bring in changes that would be generational.
We as commerce students at Sri Ram College of Commerce have been looking at, we wish to contribute therein as well.